Hello guys, just want to come on here and give you guys an update where I've been the past 8 months. I was busy during the lobstering season from April to December. Just wanted to come on here and state my circumstance, and videos will be continuing until April, and I'll try to update when I can during this fishing season. But I want to come on here and just get back in the routine of things. Got a lot of things to talk about actually. I want to talk about my development as a trader, as what I've done to the model and what I've discovered about myself in the process of it. Just want to go over that. So first things first, nothing's changed. I always start on the weekly candle. I'm considering the weekly expansion of the upcoming week. So last week being January 12th, we will look at that economic calendar. So for that week we had news on Tuesday, Wednesday, and Thursday. So that being said, those are the days I'm interested in. So let's replay this candle, because before that candle had opened, this is what I was favoring going into the week. I was favoring longs into this buy side liquidity pool, but I'll also draw a previous week low, because that could be another expansion, or this would be previous week low. So let's get out of that. So now let's go down into our hourly framework. I use a weekly drawn liquidity or a weekly expansion as my bias, and then I use an hourly chart for liquidity rates, sell side, buy side, internal range, changing the state of delivery. This is just how I read the tape, or like where I'll find my draw liquidities for my day trades, because I execute on the 5-minute chart. That never changed, which brings me into what I did change and what I found about myself. So I started trading in freshman year of high school in say 2018, and then I just dabbled with all the harmonics you could think of, trend lines, anything, and then I discovered ICT in 2022, where I found his 2022 series, and then I watched that. Didn't really understand it. I understood what he was showing. He was showing a repeatable process or model, and at that point that was something I was looking for, something that made sense to me, and that's what I was led to. And then 2023 ICT came out, where he was going to spend the year carrying his students that use this model into the live markets in 2023, where he'd share his bias and tape read live every day. I actually took a break from my work and spent a year learning this. I spent a year just watching all his videos, learning the concepts. Still work part-time, but all my focus was learning this. And little did I know that was a big trap in and of itself, because I put too much identity into trading, and that affected my results later on, but I'll get into that. Where was I? ICT 2023. So at this point I had known of 22 model, like what it was, I'm pretty sure, but I was still trying to figure out how I was going to implement it. And I was still digesting 2023 content live, like in person, because I was following along, but I didn't yet understand the model, so it really didn't help. So 2024 was like really the first year that I got to learn about myself and what I was even doing in the first place. And if I look at my YouTube channel, well, in 2024 I was learning about the model. I learned like what kind of trader I was going to be. Was I a scalper, a day trader, weekly range trader? I didn't quite know yet. I knew I liked the idea of being in and out of the same day, so I kind of leaned towards day trading. And that's when I came across his 2022 content again. I rewatched it, and I watched his structure video of how to be a day trader, and kind of just copied that and his structure of the ends model, which is his ends model video I watched a couple months ago, and that was what opened my eyes and was the missing piece for me, because I trade model 13. You can watch that video on his channel. It's one of his well, if you go to where his charter models are, you'll see all his charter models, but at the end of it he shows his YouTube model, which he calls model 13, and that's my model. I traded the M5 2022, and the only thing I've been refining and discovering myself, which I thought I was refining, was time. All it changed was time. The time that I looked for these things, the time that I traded these things. I went through a phase of silver bullet 10 to 11, pre-market 8:30 to 11, 9:30 to 11, 9:30 to noon, and that's when I rewatched his ends model video, and I had already kind of made a framework, a weekly framework. You can look at my videos in the spring. I was using the economic calendar, but I could still see myself struggling with the missing piece, and that was time. And naturally, it takes time as a trader to define yourself, and that's what I can say looking back, because now that I have a model that's well defined, really the only thing that can screw this up is me now and my discipline. I just want to come on here and show you what I've been using the past couple months. I haven't been posting videos, but I've still been trading and studying myself, I think, which I needed. Break away from everything, just me, the charts, and a mirror. So that being said, we had news on Tuesday, Wednesday, and Thursday. Those are the days I'm trading. That never changes. The weekly calendar is always my guide. In his ends model, he is capturing the weekly expansion, and his premise is really just to make ends meet. You're trying to get one trade a week that fits your framework for your pattern recognition, your stop loss, and your risk, and your target. If all those can be defined and casted forward with good risk management and psychology, you'll eventually be alright. And that's what took me a while. I was so busy refining the model and the you know, how I was going to operate within the market, when I really, the thing about ICT which I don't like is he doesn't show what it really takes to, you know, actually look in the mirror. And I guess that's also a tricky thing to explain, because a lot of people don't look in the mirror. They don't like what they see physically, mentally, spiritually. So it's a journey of self. That's why I think this is one of the hardest things in the world. And once you figure it out, there's nothing that can stop you except yourself, and that's a powerful thing. So in his ends model, he was talking about the weekly expansion, which I had known about day trading already from his videos. The economic calendar, I also knew. I was also doing that. And then model 13, I was experimenting with time. If you look at the end of his 2022 or model 13 video, he says where to anticipate these trades. He goes 8:30 when embargo forms or releases, pre-market news, and then he says 9:30 equity open, and then he says 10:30, and then 11 to 12 on Thursday, Friday, market reversal conditions, or TJF. And you know, I studied these times and how the model formed around them, and I'll show you what I did this week, and I think moving forward is going to be a big impact for me. For me, I always traded 8:30 to 11. Before I came on YouTube, I was studying that time window, and I just always struggled with pre-market. I'd always try to catch the pre-market move. I wanted to be in before 9:30 and have 9:30 deliver the move. Sometimes that worked, and there'll be examples where it worked, and I'll show you those examples. But as a businessman and an operator within something, I found an environment I don't want to be in, and I can fix that with time, and I'll show you that. So we had news on Tuesday, Wednesday, and Thursday. We know that. So now that I know I'm trading 9 to 12, 9:30 to 12, you know, I'm interested in capturing power of 3 of the 9, 10, or 11 o'clock candle, and you know, maybe the beginning of 12 o'clock candle. But so 9 o'clock, we're trading into this buy side here, and then we reject, close it down. The 10 o'clock candle is tapping internal range, but it closes below and sweeps all these lows. And then we make a new high in the AM session. So that's just an hourly framework of like what's going on, POIs, liquidity. That's how I'm reading that from an hourly chart live. And so we'll bring this out in time. So Tuesday, we had 8:30 news. So I used to trade 8:30 to, this is a perfect example. 8:30, the news drops, we displace, we make the 2022 model. We have a fair value gap in, you know, discount. And you know, it's above midnight, so this would be a trade I'd take in pre-market. And you can see 9:30, you know, we're still in that fair value gap, respecting it, but then we just fade it. And we had 10 news on Tuesday as well. So 8:30, this was manipulation. So now that I'm trading 9:30 to noon, I don't have to worry about this. I'd lose this, right? And then I'd watch New York session like I always do, and then I see this. You know, I'd see that. So really it just saves me from myself, because I can't trade 8:30 to 12. That's too much for me. So, if I just reduce it down to 9:30 to noon, I think that's a great business framework for me, and I think that could help a lot of you. And I'm actually going to rewatch ICT's 2023 content, because he focused a lot in this window. He really focused on the opening range. You can even see now in his content he's focused on the opening range, the first presented fair value gap, if you know what that is. It's the first fair value gap formed after 9:30 on the 1-minute chart. But I think a lot of his concepts are based around the New York session, and I wanted to, discover myself. Sometimes these setups do work, that's cool. But as a person and an operator, it's just something I didn't want to deal with anymore. So on Tuesday, we get our market structure shift 2022 model M5, 9:30 to noon, all ends model are met. So I'd do that, and I'd target a 2R. Why 2R? Because I learned that, like, targeting that high, yeah, it's 2.6R, but that's not guaranteed. ICT is a precision element, but as a trader, I just want my 2R. You can become wealthy with this. You can do anything you want with this. If you make 2 and you lose 1 and you have good win rate, you can do a lot of good things with that. And that's what I wanted to do. I wanted to simplify this, so where I come on the charts, I know what I'm doing, no ands, ifs, or buts, and then if I stray away from that, the mirror becomes really clean, because my actions, my inputs are clean. This is only going to result back to me what I put into it. Okay, so now we're going into Wednesday. So you can see Wednesday was a bearish day, so I'll put that low and that low, and you can see where my weekly bias shifted, which I'll also get into before we get into Wednesday's price action. So this up here, 26,118, was our weekly buy side draw that we noted earlier in the video. On Tuesday, our first economic calendar, weekly event, we take both sides of the range, and then we have a change in the state of delivery on the hourly chart here. You can see this up close candle being respected, and then we displace lower, and then that brings us into New York session Wednesday, where we're inside of this hourly internal range. So let me get rid of this. Again, on Wednesday, say I was trading pre-market session 8:30 to 11 like ICT says. So 8:30, we're below midnight, so we're already in a deep discount. So 8:30, we displace, we make a fair value gap. This is not quite the 2022 model because we don't take structure yet, but here 8:40, right here we make the 2022 model, right? That fair value gap's in premium. It's not massive displacement, it's pre-market. But this was before I come to the realization that I just can't deal with this pre-market, because I was in this trade at 850, stop above the high, and then my entry or my target down there, which was at the time that was that H1 low. So the trade had looked like that, and I have proof. Look, I also took that 8:30 trade on Tuesday, and I got stopped out on that. And then here, I went short, stop above that, and then I had, you know, 3/4 of my trade off at 2R and runners for that. But that's why I want to show you like why I don't want to be in pre-market anymore. Like when 9:30 opened, I don't even know how to explain what happened. I don't even know if you can understand. Like this candle opened here, okay? Went down, wick down. You can see this big wick. That's what was so scary about it in the moment. My orders were not filling. Like I watched my position go well beyond profit and it wouldn't close. Like it was ripping back up at one point. Like I did not feel comfortable in the position. And it was purely because of, you know, what 9:30 naturally does in the New York session. It injects volatility. And, you know, granted, you know, the trade worked. I just didn't like the environment. And that's all I'm doing. I'm removing pre-market. And that brings us into the actual New York session. So 9:30, we're taking stops. We'll go down to a hourly chart. This is our daily drawn liquidity. We split that range and, you know, discount premium. We'll get rid of that weekly high for now. So when I look at premium discount levels, I'm looking at, you know, sell side liquidity pools and internal range liquidity. And internal range liquidity is fair value gaps or volume imbalances within the range. So 9 o'clock, 9:30 open, I see my model. I see this displacement leg, the breaker structure, and this fair value gap, you know, and a premium. So that was my entry right here. Stop above the displacement leg. You know, you could get fancy and target a drawn liquidity, which I kind of did. I targeted a 2R, but it also lined up with, I think it was this low, just a little bit past that, you know, hourly sell side into that volume imbalance here. We touched that volume imbalance in the lunch hour. I mean the PM session. So 2R offered to me on Wednesday. Also another possible entry right here. We make this, that would be your second trade or pyramid position. You know, that also offered a nice 2R trade. So that's neat. And then I believe the last day was Thursday. Yep. Thursday, I see these highs and this internal range. That's my eyes, this New York session, and that low, which was took. So Thursday, again, we had 8:30 news. So I was tape reading this at the time. Also, yep, this was that entry on Wednesday. Shorted there. It went down. It was quick, but my positions weren't closing, and then it ripped right back up and then ripped my stop loss. It happened so quick that, like, as soon as this happened, it shot back up. And then 8:30 to 11 on Thursday. So that's this hourly high. This is where, you know, 8:30 to 11 works. You know, Newton Bargo releases. We have a fair value gap, you know, at 50%, just about. You know, there's no order block, so your stop is safe under that. or you can put it there if you want. 2R hit, just targeting 2R beyond that hourly buy side liquidity. So, you know, that's an example of where it works pre-market, but then 9:30, you know, the engine just doesn't work. You see 9:30, we're way above midnight, which is good. That's why these shorts look so good, in my opinion. So 9:30, you know, we run these hourly stops here. See, and then, you know, 9:30, which is now my, you know, my business model. I am trading this fair value gap, which I took, and then I got stopped out, and then I was just like, okay, I'll wait until, you know, 10:30, and then another thing about my model now is I'm allowed 2 trades max inside this window, period. It's no ambiguity, it's clarity. I know what I'm risking, I know what I'm looking for, and where and when. I think these are all important things you need to define for your model and for yourself before you develop any edge. So I took this short, risking, you know, 1%, and then I'm going into my second trade, or looking for my second trade that would look, you know, just as good as the first. And on that second trade, I'm risking half of what I usually risk. So if you risk 1%, and your second trade of the day, you'd risk 0.5%. That way, you can only really lose, you know, an hour and a half if you risk 1%. That means if I have a 2R win on, you know, say the next tradable day, then that means I'm net green half a R, which is really good for your psychology on your long-term equity curve. So yeah, so we take this high, and then we displace past structure, exactly the 2022 model, picture perfect, looks good, displacement, and I took that and I got stopped out. At that point, you know, you did your job as a trader, the engine just wasn't on, and you can see, you know, they turned the engine back on for the PM silver bullet here at 2 o'clock. You know, PM session repriced and, you know, delivered all that liquidity that we were looking for in the AM session. So this is just an example of, you know, why we have these risk management in place in the first place. I can do my job, but, you know, is IPTA going to deliver? I can't. I don't know that. So that's why we have risk management, and that's how you even make an edge in the first place. So just want to come on here, give you an update what I've been going through, what I've been using and will be using going forward. But before I log off, I just want to give you a quick overview for next week. I see that sell side here. We're also in a range because of the holidays, which is to be expected. So just range bound trading. I see this weekly sell side and this weekly buy side. But as of now, this weekly bullish order block, it looks like it's holding its mean threshold. You can see by the body closing above, you know, the midpoint of this black body, which could indicate bullish prices, but we'll see. Let's go to the daily chart. This is where it kind of looks more interesting. And what is our economic calendar for this? So we have news later end of next week. So yeah, I wouldn't even worry about invalidation until Monday and Tuesday print. But I would just have those weekly levels ready for Wednesday, Thursday, and then have your hourly chart for your levels, and then your entry model on M5 between 9:30 and noon, and I'll post what this week brings. All right.